speaking of management voices, then you've got the management of Pricol, which provided a fairly robust guidance for FY17. In fact, if you just map the one-year chart of the stock, it's been very encouraging as it's risen about 154%. In fact, let's get on board then Vikram Mohan, Managing Director Pricol, who joins in on the show. And very robust guidance, Vikram, that you've guided for. Revenue target of about 3,000 crores by FY17. Just help us understand what is the broad strategy that's set in place in order to achieve this kind of growth.
We would achieve this 3,000 crores of revenue as a combination of organic and inorganic growth. We have a very healthy order pipeline for the next 3 years, which would give us about a 20% growth rate very comfortably with our present operations. There's an increased thrust on growing our exports, for which we have set up a very robust international presence with actually people on the ground in various geographies across the world. We are also looking at between 2 and 3 acquisitions in Europe and America in the oil pump, water pump and automotive sensor space, primarily supplying to the commercial vehicle, off-road vehicle and tractor segment. We have one greenfield facility going on stream in Pune in the month of August. And if the Indian market continues to maintain the same momentum as it's showing signs of today, we will add another plant in the south as well. So a combination of all of this, we see a very clear visibility to get to about 3,000 crores consolidated revenue by FY20.
So what are some of the medium-term goals that you're planning for the company while targeting the above-mentioned 3,000 crores?
As I mentioned earlier, the acquisitions are going to be spread out over this period. I'm hoping to complete one acquisition this year, which will add between 300 to 400 crores of top line. We also expect to grow at between 20 to 22% this year with the order book that we have, and we expect a similar growth rate for the next year as well. And perhaps another acquisition in the next financial year or no later than the financial year after that. And one more greenfield plant if the markets in India support us in 2018-19. So this is kind of the roadmap that we are looking at to get to our 3,000 crore target.
Okay, that's pretty interesting. Let's also talk a little bit about the product offerings. You have more than 1,000 in the auto ancillary space. So what kind of product mix has proven to be the most optimal one for maximum growth?
We have 4 product baskets. 1,000 meaning it's a lot of it is variants. For example, we are the world's second largest instrument cluster manufacturer for two-wheelers. Now, for every model that we supply, it is one product offering. So in that sense, it's 1,000. But broadly, we can divide the products into 4 baskets. One is the instruments and sensors, of which we have about a 40% market share in India, and globally we are the second largest in the two-wheeler instrument space. And we would like to continue to maintain our numero uno position in India and keep consolidating our number 2 position globally, but focus a little bit more on the off-road vehicle, tractor and commercial vehicle segment in the instruments globally. Coming to the second segment, which is perhaps our fastest growing segment, which is also a big thrust area for us, is oil and water pumps, where we have a sizable play in India, and in Brazil we are the market leader. We would like to grow inorganically in this space in the United States and in Europe. So that's the second basket of products. In fact, that division for us has grown actually 40% year on year over last year and about 27% over the previous year. So we are seeing some accelerated growth there. The third basket is our asset management solutions group, which is more solutions-based products, where it's not so top-line driven but very bottom-line driven, where we combine the power of hardware and software and customized solutions for customers, which we are slowly seeing traction and have gained some.
Vikram, let's also talk a little bit about the latest round of capex that you've completed. What kind of capacity additions have you achieved from this, and what does your new capacity now stand at?
We are currently operating on a 3-shift basis at around 70% capacity utilization. Some plants are running at peak capacity, some still have capacity, like our plants in Pantnagar still have capacity. Pune we have maxed out, which is why we needed a new larger plant. We have planned about, and I'm slightly going to answer your question differently. We are expecting to spend between 350 to 400 crores towards creating new infrastructure or acquiring infrastructure or factories over the next 2 to 3 years. And a significant amount of this is going to come through internal accruals because our cash generation is very healthy and we have an extremely low leverage at this point of time. Our debt equity is about 0.2. I would leverage the balance sheet also for the rest.
Thanks for joining in, Vikram, and giving us a sense as to what the business outlook is for Pricol as well as your acquisition plans, which sound fairly promising for the year ahead. 84.6, and this has been one promising stock in the last 1 year. Tell you what, we'll slip into a quick break right here on Hot Stocks. Stay with us. We've got lots more lined up on the other side. Tell you what the dealing rooms are betting on and get you top technical trading calls.